Progression.
Thank you so much. Okay. I only just try to record it on YouTube in case you prefer a YouTube option. Okay, let's move ahead. Does anybody need any clarification on what you have done so far?
I have a general question now, Sola.
Okay, go ahead.
Okay, in terms of the whole finance and sustainability of a business, right? How would you relate this to a startup? How would you tie this to a startup? Would you use projection or a startup company? A startup company. Would you use projection?
Okay. When it comes to sustainability, let's look at that one first. We are looking at the ability of the company to keep growing.
Okay.
To maintain your product line, to be able to keep good relationship with your debtors, suppliers, and others. And when we look at either the funding or you look at the working capital, your working capital and the position you have determines whether you are able to take advantage of being able to buy something. And it may vary from industry to industry in terms of the cash flow. But when you talk about horticulture, when you have to buy things like vegetable, when you are talking about buy things like seedlings, you will discover that you actually need enough cash to be able to do what you need to do. Like we're talking about buying in bulk, which is very essential. If you don't have enough resources on hand, to be able to buy in bulk becomes a very difficult situation. So it means it is a very essential for the sustainability of your business. And it's at the same time, it is not ideal that you have so much cash also, excess cash. Otherwise, you may be tied down funds. So you look at it also, what can I do with my cash? Can I invest it for 30 days or 90 days? These are still part of the things that are still essential as you are doing the business. And at the same time, there are some people you want to buy their products, maybe from farmers. And they say, sorry, it's cash and carry. From here, they say, oh, cash and carry. Give me money, I supply your products. Where if your cash flow is weak or your working capital is weak, honestly, you may lose the opportunity of buy from those farmers to other people, especially when you have other people who want to buy from them also. They would rather buy to the person that is able to give them cash, even at a lower price. And at times, because you have cash on your hand, you are able to negotiate better on the pricing. I think these are the essential things that are necessary in terms of the sustainability of the business. I don't know if it is clear.
Thank you, Sola.
Are you okay? Or you want further clarification?
Later on, not right now. Thank you.
Thank you. Okay, so we said the working capital is also known as what? Net working capital. And it's total amount of liquid cash, like we mentioned, that an organization has to run its operation, like we've mentioned. Liquid assets are assets that can be easily converted to cash, but not limited to. It could be accounts receivable, it can be cash in bank, it can be cash in hand. Accounts receivable that you are supplied and you are expecting the person to actually pay you. And the general equation for working capital is current assets less current liability. Have we mentioned some current assets? Mutiso, can you give us an example of current asset from your organization? Mutiso, you are welcome. Okay. Sorry, Edward, you raise up your hand. Edwin.
Yes, I wanted to just clarify for Prince about working capital for startups. And I want to believe that he's asking about a startup that has not started generating cash flow. Is that correct?
Yes, sir. That is correct.
Yes, so basically you will use projections, either for the industry averages, you can get those information from your National Bureau of Statistics, or you can have some projections based on what you want to do. And then you can be able to determine how much money you need for a cycle of, let's say, a month, or a cycle of 4 months, if it is a quarter, a year, or a year. That way, when you're raising financing, you know what you're talking about. So most investors will ask you about how much investment do you need and how much is going to the working capital? I don't know if you've heard most of them asking this question. Then you're able to tell them from your calculations that I'm looking for X amount. It will be used in Y activities, and I intend to collect after, let's say, 30, 45 days after selling. That is what basically I think you are trying to ask mostly, but I think I heard Shola was answering more of a business that is already running. I don't know if that clarifies.
Yeah, I appreciate the clarification. Thank you.
Okay.
Thank
Shola,
you.
you can go on.
Okay. Yeah, current assets, things like cash at hand, prepaid things like scratch card, pay cards, and all that. Also, inventory. That is top.
Thank you, Motiso, for your contribution. Daniel, can you give us some examples of current liabilities?
Recording in progress.
Daniel, can you give us an example of current liabilities?
So current liabilities are goods which the company or organization buy.
Okay. Does anybody want to add to it?
Can we put rentals as current liabilities? Rentals, electricity bill, water bill?
Dr. Shide is talking. Does anybody want to respond to that one before I respond?
Yeah, I think she's correct. Anything that's short term, like rent payable, wages payable, anything that's short term.
For me, I say she is correct if it's not paid at the end of that at that period. If it is unpaid.
I said, if it has not been paid at the end of that period.
Yes.
I
agree with Daniel on that one.
Okay, sorry.
Salaries.
Yeah, Lawrence says is correct.
Did we lose Shola?
Okay, sorry. I think it's the internet also from my end. From what I said one, like what Prince and Laurent, I mean, like what Lawrence have said, it is not an asset. It is a liability if it is outstanding, if you are here to pay it. But after you are paid, I mean, at times you are owing, then becomes a liability. Maybe you also have paid it and you have not paid, it's a liability. That same thing that is a liability can equally be an asset. Becoming an asset, how? Can somebody explain to me how it can be an asset?
Okay.
So how can rent be an asset and how can rent be a liability?
It can be an asset if it is paid in advance, but it can be liability, which when you recognize on a accrual basis, it means it is unpaid.
Thank you so much. It's an asset when it has been paid in advance, and it becomes a liability when it has not been paid. Dr. Shido, are you okay now?
The network is disappearing. Can you kindly repeat what you've just said?
Okay. If let's take, for example, your rent or insurance. If you are owing, it is a liability. Maybe you ought to pay in January and you did not pay until April. By the time you are reporting in March, maybe it's just $50 per month. It becomes a liability. For example, also, that same rent, maybe you paid 1 year in advance and you have only spent 3 months. The other 9 months becomes an asset because you have already paid in advance. In case of any crisis, you might be able to collect your money back in a good economy or in a good situation. You will collect everything back. So it becomes an asset. So the same rent that is a liability, it can equally become an asset. What makes them an asset or a liability is not the name. It is about the position at a point in time.
No, thank you. Understood.
Thank you so much. Edwin, you want to add to it?
No, I think you've explained it perfectly. The only thing I want to remind the team is for expenses, you have to record it within the period that it occurs. I think that should be very clear. So for example, if an expense, and I think we covered this one some time back, if an expense occurs in January, you cannot pay for it in December and record it there. So usually if the period ends, if you're closing the balances of January, you will now have to accrue it, which it becomes now a liability, like Daniel was trying to explain to us. But also like Shola said, if I paid the rent up to December in January, then I have an asset that I rely on. So I think the time period of recording is very vital, even as you record your day-to-day business expenses. Typically, expenses are what turn into liabilities, especially when they are past the time due. I think that is just basically what the summary of what Shola was explaining and Daniel. I hope that is clear for everyone.
Thank you so much, Edwin. Let's move ahead. So like we said working capital is current assets less current liability. Look at this short question. Who can tell me what the working capital is? Dr. Shido, can I engage you? From this
Yes,
question,
you can.
What is the working capital?
Information is derived from the records. The working capital of the company is 365. The motor vehicle, has it been bought? Or is it the value of the motor vehicle we already have?
Yeah, the motor vehicle is 700,000.
Working capital, it's 300, 4, 5, 6, 7, 280.
Okay, Dr. Shido said 280. Does somebody want to come with either corroborator?
Somebody is raising his hand.
Issues?
Shola, somebody is raising their hand. Sakile, I think.
Okay, Sakil.
You know, hi, Sterling here. We are attending together with Sakila. I'm having problems with my network.
Okay.
Okay, can I come back again? I think current, you're saying working capital is the current assets minus current liabilities. So it should be 420 minus 420,000 minus 365,000. Because the motor vehicle is a fixed asset, isn't it?
Yes.
So which means our answer should be 55,000.
Okay, okay, that's good. Sakir, thank you for raising your hand. Any addition? Sakir.
Challenge is using my device. He's the one who raised his hand.
Okay, no problem. So we can see, like what Shido said, the working capital is 55,000. You can't take the motor vehicle is a fixed asset, so it does not affect the working capital. Thank you so much. Okay, want to look at fixed assets, fixed variable costs, break-even analysis. When you talk about costs, you talk about resources that you use to make a product or deliver a service. Normally, it is expressed in monetary terms. Maybe what you use to buy a motor vehicle, or what you use to buy the seedlings, or what you use to control the dam, or what you use to buy the fertilizer. These are costs. They can either be fixed costs or variable costs. And I'm sure we have spoken at length on this issue, on this topic in the last 2 weeks. Can somebody help me look at various ways at which you can look at costs? Nadine, classification of costs.
Okay, costs will be associated with, let's say, your product or your services. So for instance, you can have production costs, operating costs, marketing costs, sales costs. So it all depends on what aspect of the product or the service that you're delivering, and then the particular expenses or specific costs associated with it.
Thank you so much, Nadine. You has given us an idea. Philippa? Philippa, are you with us?
Yes, I am. I'm just in a bit of a noisy place. So I'm trying to run away from the noise.
Okay. So can you talk to us briefly on classification of costs?
The cost would be the variables. I believe the variables would be ones that are not, there's variable ones and then there's fixed ones. Say if your rental is an amount, $1,000, that's a fixed cost until maybe it rises. But a variable one would probably be things like your inputs, which may be changing with time and inflation and things like that. So that's what I think would be your
changes with production process. Thank you.
Yeah.
Okay, let's quickly look at some things. We can see that it can be either fixed costs or variable costs. It can be fixed costs or variable costs. When you talk about fixed costs, it does not change with volume of production. Like a motor vehicle, doesn't change. Like land, it doesn't change. Like a machineries, it does not change. Change in relation to volume, that's variable cost. For example, your vegetable will actually change again and again. Then you look at it can be looked at leisure also, are time related as they remain constant over a certain period, and some does not. So these are some of the classifications of it. Like the fixed cost, we say is rent. And it's not every time your rent can be fixed. Can somebody respond to that one? Are there times that your rents are not fixed?
I think rent is fixed for a specific period, depending on the contract. So a contract can be, say, for 6 months, for 1 year, for 10 years, whatever. So it depends with the contract to which you are signing.
Okay. Chido said it depends on the contract that you sign. Can somebody answer it? Okay, Philippa, I can see your hands up.
Okay. I was going to say that some people will charge rental based on the production. So on your so if there is higher production, then they will give you, I think it's what do they call it? Your income. So they will, your turnover, not your income, your turnover. So they will charge you based on that. Then there's others that will charge you just a building, like a house or something, and an office building, and you just charged a straight fee without any additionals. So that could actually be a fixed one.
Thank you so much.
Can I also add on what Philippa has just said? For example, in our situation in Zimbabwe, there are people who lease farms. So the amount the rentals are paid, it's a net on what has been produced. That's how they calculate. So it depends whether the farmer harvested more or they harvested less. That is what is going to determine the rentals they are going to pay.
Thank you so much. Edwin, I see your hands up. Or you are clapping for them?
No, I'm clapping for them. I think some of those examples are quite relevant because.
Nobel.
Yes.
Yeah. Thank you so much. So the break-even, when you talk about break-even, it is when your revenue and your total cost meet. No profit, no loss. They said that's what they call break-even point. As if your total cost and your total revenue are equal. And how do we calculate it? It's determined by your fixed cost divided by sales price per unit minus various costs per unit. Sales price per unit minus variable cost per unit is what they call contribution. For example, maybe avocado. You discover that you bought it for $10 or 10 cents, and your sales price is 15. What is the contribution? Let's assume the sales price is 15 cents, and your total variable cost is 10 cents. What is your contribution? Mwati or Prince?
Could you please repeat the question?
In case your sales price for avocado is 15 cents and your total variable cost is 10 cents, what is your contribution or your margin?
5 cents.
5 cents, great. That's what in accounting they call cost contribution per unit. And that's what to say there. Now let's look at this question. Can somebody read the question for us? If your line is good and you can see clearly, can you read for us?
Maybe I can read it.
Go ahead.
Dr. Yes, I can start?
Go ahead.
Dr. Shido Matewa is the owner of a park house company that exports fresh avocados. She has determined that the company's park house fixed costs, consisting of rent, administrative salaries, insurance, add up to $21,000. The variable cost associated with packing 1 4 kg carton of avocado is $4.5. The packed avocado is sold at a price of $7.5 per box.
Thank you so much. Now, can we determine the break-even point? I know we said that the break-even point is fixed cost all over contribution.
Yeah.
From this question, what is the contribution? Laurent? Lawrence, what's the contribution per course? Per carton? Lawrence, are you with us? Maybe his internet is weak. Dr. Shido, this is your company. So what is the contribution per box?
It's $2. $4, $5, $3.
$3. Great. So we can see from it's $3. You can see 7.5 minus 4.5. So is there anyone who do not understand how we arrive at this? If you understand, can you just type yes?
Yes.
Thank you, Prince. Thank you, Daniel. Thank you, Nadine. Thank you, Shido. Philippa. Okay, thank you, Philippa. Boaz. Mwati. Saki, thank you. Okay, let's move ahead. Mwati, thank you too. You can see the break-even point. Because the fixed cost is 21,000 and the contribution is 3,000. 21,000 divided by 3 make it 7,000 boxes. It means for them to break even, they must sell 7,000 boxes of avocado. All these are relevant in your decision making. By the time you bought them, you are asking how many boxes of avocado must I sell for me not to make loss, to break even? And for Dr. Shoshido, she must sell 7,000 boxes. It means a breakable point in units, in dollars, total is 7,000 times 7.5. It means when she have a sales of 52,500, she can tell anybody at this level, no loss, no profit. And the other thing I said, beyond this level, I'm making profit. Do we have any clarification on break-even points or contribution? And what's any question?
No questions.
Thank you so much. Philippa?
None from me, thank you.
Nadine?
No, I'm clear, thanks.
Prince?
Oh, no question, thank you.
Thank you so much. So let's move to this third sequence, which is going to be the last one for today before we look at our feedback. We want to look at cost benefits analysis or balance sheet commitments. Those are the two things we want to look at. But before we go ahead, I want us to do this exercise. I wish it is a face-to-face program. I will offer you a gift. But I want you to write your answers in the chat, and I want everybody to be part of it. Can somebody read the question for us?
I shall read.
Yes, go ahead.
It reads, Mary's father has five daughters. Nana, Nene, Nini, Nono. What is the name of the fifth daughter?
Please write your answer in the chat box quickly. You said no. Philippa said Mary. Daniel said no. More response? Prince, I've not seen your answer. Okay, Daniel said Mary. Mwati said Mary. Saki said Mary. Okay. Nadine said no. Shidu said Mary. Okay, good.
I'm typing Mary, but I don't know it's not going through.
Okay. So what's your answer?
Mary, but it's not going through. I typed that a few times.
Okay. So why do you say Mary? Why not no?
Because Mary's father.
Okay, it's true. It's Mary's father.
Yeah.
Okay, let's look at the second one. Second one. Can somebody read this quickly? Can somebody read this one for us?
Mary's father has 5 daughters. Nana,
Oh, number
Nene,
2.
Nini, Nono.
Question 2.
Oh, question 2. What occurs once in a minute, twice a moment, and never in 1,000 years?
Can we answer it quickly? You can unmute yourself and speak.
It's M.
It's M. Okay. Princess M. We get another thing. Daniel, what's your answer? It occurs once in a minute, twice in a moment, and never in 1,000 years.
I'm still thinking.
You are still thinking. Okay.
Yeah.
Nadine? Okay, let's move on. It's letter M. You can see it in a minute. Letter M is there. Moment. Letter M occurs twice. 1,000 years. How many times? None. Thank you so much. You are too far. Otherwise, I would have given you some gift. Now, a cost benefit analysis is the process or tool used to compare the immediate or projected benefits and costs associated with a decision to determine whether it is worthwhile to take such an action. It might be a decision to buy maize from a farmer or plant your own maize. It may be a decision to buy a tractor or hire it. We face this decision on day-to-day basis. We don't just rise up and say, I'm going to plant my own maize. You look at the cost, you look at the benefit. What of if I should buy? Oh, it saves me the issue of cultivation, the issue of pesticide, the issue of getting fertilizer, the issue of low yield. You look at it. And you can, in case I plant my own, oh, I can have higher yield. I can control when I buy and what I do. That's what we call cost-benefit analysis. And when you talk about all balance sheet commitment, these are commitments. It may be an asset or a liability that does not show on your balance sheet. Can somebody give me an example of a commitment that does not show on your balance sheet? Prince, you want to give me an example?
Is it like a lease?
A lease, good. An operating lease. Thank you. Another example? Philippa?
I'm still thinking.
Okay. Boaz?
Hello.
Let's go ahead, Boaz.
Still thinking.
Still thinking also. Nadine?
Any accruals?
I tell your network is a bit poor today. Like what Prince said, operating lease is an example. You might lease a tractor. It's not yours. You are only paying lease renter. You have that machine with you. If there's any fault, you return it to the lessor. So it's an off-balance sheet asset. This may eventually result into an asset or a liability later. For a liability, we are going to look at examples later. The asset and liability may be used by a company, but the legal ownership may not belong to them. Now, using the asset doesn't belong to you. The legal ownership does not belong to you. It can be a vehicle. You can lease your vehicles, but the legal ownership does not belong to you. Do we have any clarification? Let's look at examples of off-balance sheet commitment, operating lease, like the one that Prince mentioned, sale and leaseback. There are times that you sell your asset to a company because you need cash, maybe a tractor, and you say, I need some cash to actually buy some products. And you sell it to a company, and you lease it back from them. You are still using the asset, but the legal ownership does not belong to you again. Letter of credit. Maybe you want to import, and you are saying, sorry for me to buy from you. Open a letter of credit. That upon receiving the products, I will pay you. It will show as a liability on your balance sheet. But after receiving it, and you have not paid, it becomes a liability. Guarantee of a subsidiary. Maybe you are a master farmer and you have other farmers, and you told them that in case anything happens to farm A, I'm going to offset it. Maybe the farmer wants to borrow money from the bank and say, I'm working for Daniel. And Daniel said, yes, that maize is for me. In case he does not pay back the money, I will pay. It may not be a liability as at that time, but if that farmer is unable to pay, it becomes a liability that you have to take care of because it's your subsidiary or you have guarantee. It's the same as guarantee of customer, securitized loans, like I mentioned, partnership. Maybe the two of you are in partnership. In case anything happens to that farmer, you may have to share part of the loss. Because what? You can call it a contingent liability that is likely going to occur. It can be a joint venture, which is similar to partnership also. All these are examples of off-balance sheet commitment. Does anyone need any clarification? Mwati, any question from you?
No questions.
Boaz? Do you understand it?
So let's understand.
Okay. Edwin, you want to add to it?
Not really. I think this covers majority of what I would have said myself.
Thank you so much, Edwin. So these are examples of all balance sheet commitment. They have importance. And what is it? It gives you a healthy balance sheet. For example, instead of having the cost of a tractor that maybe is about $100,000 as a fixed asset, you choose to lease it. So you only have the lease renter of $2,000 per month. So it makes your balance sheet healthy. By the time they are looking at the return on investment, so you discover that it's high because your investment is low and the return is high. You share the risk for a lessor. The lessor gave you the equipment and you see your possession. If anything happens to it, based on the agreement, the lessor repairs it. So you are sharing the risk. Good management of cash flow. Because instead of tying down so much money on an asset, you said, no, I'm going to lease it. And you're able to manage your cash flow in a proper way. For the letter of credit, instead of paying in cash, we are telling them, deliver to me. I will pay you upon delivery. And it can be to a customer also. Some of the people supply you either avocado, supply mangoes, supply vegetable. Tell them, supply to me, and I will pay you when you bring it. Or the guarantee that instead of going to the bank to borrow the money, we are saying, my subsidiary, go to the bank, borrow the money, I will pay in case you do not pay. So it makes your books to be tidy. Purchase asset at a minimal price at the end. For most leasing, especially operating leasing, it might tell you that after 4 years, we sell it to you at 30% of the cost. Because on the average, not many people want to buy the asset, especially if it's a customized one. So you have the opportunity of buying the asset at a lesser price at the end of the leasing period. All this is, we should use them on day-to-day basis. An operating lease shows lower liability on the balance sheet because it's only the outstanding lease renter that will be shown on your balance sheet. Does anyone need anything to be clarified? Any clarification? Nadine, are we together?
Yes, we are.
Thank you. So we're almost rounding up. So we have seen 3 areas that you have covered today. And we discover that these are essential. And let me now come back to you. Do you think the areas you have covered today are essential to your business? Why? Daniel? Daniel?
For my organization,
yes,
I can see the concept of financial analysis can assist me in management level or on making a decision, also advising the shareholders due to financial analysis where to invest. Also on working capital, just to see the liquidity of my organization to meet the short-term obligation. Yeah.
Okay.
but also on the off-balance sheet. This can assist either to on decision either to buy or to lease certain machine which can be used on the farm operation.
Thank you so much.
Yeah.
So, Shido, what is your takeaway today? Dr. Shido, what is your takeaway today? Okay, Philippa, what's your takeaway today?
It's about the financial information, what you use it for, and the importance thereof, especially where you're looking at the health of the business, just what exactly is important in that respect. All those, you know, we now managed to put in all the information we learned from the first lesson to make it meaningful, and that has been helpful.
Thank you so much. Prince, what's your takeaway today?
Hello.
Yes,
my takeaway today, the break-even point, especially as it concerns pricing, how to be profitable. So that's something I took away. And then also finance concerning a startup. That's something I took away, and that's practical. That's something I could use immediately with my business plan.
Thank you so much. Does anybody need any clarification? When we began today, we mentioned some things that we want to cover. And I want to ask the question, and I want yes or no. Did we cover the importance of financial analysis?
Yes.
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 Did we cover the role of finance in business sustainability?
Yes.
Yes.
What of components of working capital?
Yes.
Yes.
What of how to prepare a simple break-even analysis?
Yes.
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 What of cost benefits analysis?
Yes.
Yes.
What of all balance sheets commitment?
Yes.
Yes.
What of importance of all balance sheet commitment?
Yes.
Yes.
What of types of all balance sheet commitment?
Yes.
Yes.
Thank you so much. If I've covered it, it's because we work together as a team. And I also thank you for being part of the team of the program for the last 1.5 hours. Anything for clarification before I hand over to Edwin? You need any clarification, yes or no?
No.
So much.
No.
Over to you, Edwin.
Thank you very much, Sola, for that. And thank you, everyone, for participating today. So I'll just be quick. I can see we are over time. So please go into the e-learning platform and you can read more about this, what we just covered. 1.5 hours is sometimes a short time, so you can be able to enrich your knowledge on especially areas like break-even point, which is very, very necessary and very vital for businesses, and also issues like off-balance sheet items, how to present it in your balance sheets, and also issues like working capital, which is very vital. Now, it is also important to come in a bit early for these sessions because we are getting into a place where it is more practical than theory. And sometimes if you're left behind, might be very difficult to catch up. Lastly, I checked on the e-learning platform. I saw module 1, end of evaluation assessment, only 9 out of 20 of us have done it. So I was able to grade you guys. So please go back there, check if there are any comments. The majority of you guys really understood the questions. So that is appreciated. If there's something you don't understand, please reach out. But the 9 people who attempted were graded, and you can see my comments there. Lastly, the ones who have not done it, please submit it. Also module 2, because we finished it last week. And then we can go into what we are learning this week. At the end of this week as well, we'll be able to, you'll be able to go into the e-learning and do your module 3 assessment. Update your learnings as you go along. It is easier for us to know where you are, what you don't understand. Then we're able to get in and also help you to catch up to the rest of the class. I think Shola will be sharing an assignment after this, or the next steps after this. And I would wish you a happy, the rest of the day, which is happy afternoon to the people in Zimbabwe, Malawi, Tanzania, and happy good morning and the rest of the day to the people in Sierra Leone and the other side of the hemisphere. So I think I'll see you on Friday, and Shola will still be finishing on this, on the last, I believe, last sequence of this module. Thank you.
Thank you so much. Bye.
Bye-bye.
Bye.
Bye.